Okay, good morning, everyone. I'd like to welcome you to this is our second panel on short sales and foreclosures. I would like to introduce our panelists first. We have William Sokol, who is an attorney. His office is located in Haddonfield. He does work in the state of New Jersey and the Commonwealth of Pennsylvania, and he's been doing it for over 16 years. And we had Bill on our first panel, and Bill is a wealth of information. So I hope you take advantage of that today and ask him all the questions now that we have him here live. Our second panelist is Janine Brady. Janine Brady is not only is she a licensed real estate broker, she is a former paralegal who handled many short sales and foreclosures while she was working with the attorney. So she can give us her views on it from both sides, being in the legal world and also being on it as a real estate agent, like all of us are right now. Our third panelist is Francesca Anella. She is the branch manager of Advisors Mortgage in Tinton Falls. Francesca has about 23 years experience in the business. And Francesca has a wealth of information for us on, what happens to that person after they've experienced a short sale or foreclosure. Can they buy again? How are they going to buy again? So again, we have all these great panelists here, so please pick their brains. I also have Peggy James, who is my vice chair of the education committee. We have Lauren San Nichols in the background, as usual, from the MORR staff, who always does a great job at setting these things up. And I am Louisa Sagaris. I am your 2022 Education Committee Chairperson. So I'd like to start this event and I'm going to pick on Bill first. Bill, as an attorney, what advice or what information do agents need to know when they're dealing with a short sale or a listing that's going to foreclosure?
Sure, and Louisa, thank you so much for the kind introduction before. Happy to be here on the MORR panel today discussing short sales and foreclosures. First, I think I want to start by saying that now that we're seeing an increase in the amount of foreclosures and sheriff sales taking place, we're also seeing an increase in the amount of short sale clients that we're getting on a weekly and monthly basis. And I think that any agent who is going to be taking on clients in a distressed situation or clients who are in a short sale situation, one of the most important things to do is to surround yourself with people who know what they're doing. Our firm, when we're representing the seller in a short sale, there is no charge to the homeowner for our services. We will get paid by their mortgage company. So, we encourage agents who may not be experienced in short sale listings to take advantage of our services, make sure they have their homeowner contact us so that I can give them a consultation and explain some of the legal consequences that come along with doing a short sale, making sure I can answer all the legal questions that they have. And also I'm looking for red flags, circumstances that may make the short sale impossible or more difficult than it needs to be. So, I think if you're going to be working with distressed homeowners, it's important to learn as much as you can and surround yourself with people who know a lot about the business.
Okay, thank you, Bill. Janine, would you like to say something before we start with the questions?
No, I just see one of the first questions that it indicates about the steps in the sequence. So if we want to start with that and elaborate, because everything is pretty much sequential and it's all in preparation. And it starts with when they're going to have that conversation with the homeowner and just asking the right questions with the homeowner, and not because the homeowner is going to be defensive and they're not going to want to open up as easily. So that they're ashamed, they're embarrassed, it's pride. So you have to really sit and establish that relationship with the client, and that's where it starts.
Okay, thank you for that, Janine. Francesca, would you like to say something as well?
Sure. Good morning, everybody.
Morning.
So yes, what Janine said, so true. The homeowner does get a little upset and defensive. it's not a bad idea to have them talk to someone like myself, someone that, a loan officer that knows what's going to happen after that short sale, after they've done that. And they're a little more open to talking to someone in the mortgage end as opposed to their realtor about their finances and what's going on. So that's definitely a great idea to, find out a little bit more about them ahead of time.
Yeah, and it's also good for us if we're listing the property to kind of be able to give them that advice at time of when they're listing the property. Hey, listen, hopefully whatever, of course, talk to someone like you, Francesca, hopefully within a year, 2 years, whatever, you'll be able to buy something again. So it is good to have someone also in the mortgage business that can help them with that. I did see a question relating to title on the question chat box. Can they order title on a title search? We don't have a title person on right now, but I think correct me if I'm wrong, Bill, if you're working with the title company, you could, I would recommend, and Janine, you guys can, I would recommend calling somebody and getting a title search done to see exactly what's owed on it. So you kind of, because like I said before, they're a little embarrassed, uncomfortable. They may not tell you everything, but a title search is not going to lie.
Yeah, I mean, obviously certain agents have really good established relationships with title companies, so much so that, title companies at no charge would order some type of a background search to see what liens and mortgages and judgments are against the property. As far as my office goes, we always try to control title in our transactions. We like it. We really appreciate when the buyer allows us to order on their behalf. The title companies I work with won't charge the buyer a cancellation fee if the short sale gets denied. So at the very least, if I can control title, I get it very early on in the transaction to avoid any problems. But as far as ordering it online, I think Janine mentioned earlier, you really can't. I mean, you can email your title rep and order it that way, but there's at least no service that I'm aware of where you can log in and pay a fee, and it's got to be done manually still.
Right. Yeah.
It is a great idea to order that title ahead of time, because most likely if someone's heading toward a short sale, there are other things that will pop up. So there could be other judgments, other liens that you're not aware of until the title comes back. So
right. And if somebody out there does not have a title company, please check our list of affiliates on our MORR site. Call the board. There's a list of affiliates. I'm sure they'll be more than happy to work with you and help you out. Can we start with and Francesca, I have a couple more questions for you. So sure. Let's say we're on a listing appointment. Okay, let's say Janine is on a listing appointment or Peggy's on a listing appointment. And actually this question is to all three of you. Of course, we're going to do our job, get all the paperwork done, according to MORR and your office policies. What else is most important besides getting a title search done? What else did you do, Janine, more like when you took a listing like that? Because I think sometimes agents are afraid to take a listing because they don't know the process.
Well, the first thing, like I said, is when you meet with a client is to really gain their trust so that you can get a better picture of their financial profile to understand if there's a first mortgage, a second mortgage. If they're not so willing to be forthcoming, and it takes, sometimes a second visit or another follow-up phone call, it's knowing that they have options. Sometimes short sale is not their option. They may have a deed in lieu. There may be, foreclosure may be the option, maybe bankruptcy. So it's really important to even, that initial conversation with them is really going to paint the picture on their options and how they can proceed. And that's why it's important to have that open communication and dialogue with them to take down that pride barrier so that you can really be the resource for them and guide them in the right direction with the support of the professionals, like an attorney and an advisor from a mortgage rep, just to have those in place. The picture, the short sale package is going to come from the lender. So you have to request that. Everybody's package is pretty much similar. And in that, I would suggest that's where you do your title background, because you want to make sure if they only told you they have a first, they may forgot they took out a home equity line and haven't paid that, and they have that as well. They might have judgments that they forgot that they had. There might be some sort of DMV implications that you don't realize that are out there. So it's really important, and it's to paint that picture before you send it to the lender. and you have a whole almost book. It's a profile. You're going to have bank statements, tax returns, hardship letters. So, but you're going to get that information and third-party authorization from the lender. They're going to dictate what they want, and do not send it piecemeal. You need to send it and paint that picture up front as a whole in order to really be efficient in getting that process.
Okay. There is a question here. What types of liens should agents check before getting their buyer into a short sale purchase? What types of liens may have to be paid by the buyer upon closing if the seller can't afford anything?
I mean, technically, the buyer doesn't have to pay any liens of the seller unless they agree to. You know, when I'm representing the seller in a short sale, one of the changes I'll make to the contract is that in the event I can't get any liens paid as a part of the short sale, the buyer has the option to pay them, but you can't really force the buyer to pay any of the seller's liens. You know, some are less likely to be paid in the short sale proceeds than others. But, you know, ones that I would want to watch out for if I were buying a short sale personally, I would want to watch out for IRS liens, not because they're hard to deal with, but because I want to make sure that the other side knows how to remove them. Child support liens would be a big one, because you can't remove the child support lien unless the spouse receiving the support or the individual receiving the support is agreeing to release them. Another lien we've seen in the past that have been troublesome are overpayment of unemployment benefits. Very hard to settle, if not impossible. So there are certain liens you want to watch out for, but again, there's nothing the buyer would have to pay unless they sign an agreement to do so.
Okay, thank you, Bill. Peggy, there's a second question. You want to grab that one? Actually, there's two more, actually.
Sure, let's see. Okay, next question. I am unsure how I want to say this. My client has a reverse mortgage that is going into bankruptcy. My head is spinning.
Oofa. That's a tough one, the reverse mortgage.
First question, what chapter bankruptcy, 7 or 13?
Didn't say.
It's important because with a 13, you'll need court permissions to sell and court permissions to get paid. And a 7, you just have to wait for the trustee to abandon their interest in the property and you can close. So that's big issue number one. And big issue number two is whether NOVAD is servicing the reverse mortgage. Because if NOVAD is servicing the reverse mortgage, there are time restrictions and money restrictions on the ability to do a short sale. So if that client were calling me, those are the two things I want to know right away: which chapter and whether NOVAD is servicing that loan.
So am I reading this right? So not only is there a reverse mortgage, there's also a POA involved on this? And the POA doesn't have all the information on it?
She's saying yes.
Yes. Wow. Wow.
So I'd like to add something. So I'm assuming that the homeowner that took out the reverse mortgage has passed away, and this is their beneficiary that's inherited the house. If that's the case, they do have 12 months from the time that person passes away to pay that back. Some companies try to rush it and it's almost, I don't know if it's a scare tactic but they let them know that a foreclosure is coming, but they have a little bit of time for that. I'd like to find out more about that. I know this isn't a reverse mortgage panel, but I'd like to help that agent. And if you want to reach out offline, or if we can answer online, that's fine too. I just didn't want to get off topic too much.
Her client is in a nursing home, actually.
Okay.
Yeah.
Okay. And how long has that been? That's what we need to find out a little more details. Is this, where is this foreclosure? Is it, has he been in the nursing home for a month? Has it been 12 months? How long has it been? And there are more circumstances that we need to find out in order to figure out how to help them.
The property can be short sold. It's just a matter of finding the answers to the right questions.
Correct.
It's just a matter. Okay.
Nothing there is impossible yet.
Do you see a lot of that? Do you see a lot of, or have you seen a lot of foreclosure short sales with the reverse mortgage?
Recently, I'm telling you, I swear I've gotten like 10 or 15 new ones in the last few weeks, all reverse mortgages.
You're kidding me.
I don't know why.
Right.
This is why the NOVAD issue came up, because NOVAD, in other words, so NOVAD reverse mortgage service short sales, they have these weird guidelines that won't let you do a short sale the date of delinquency is longer than a year, or if there's any outstanding real estate taxes or HOA, they won't even review the short sale until they're paid up front, which is very difficult to do in a short sale transaction because no one wants to pay something on a transaction that may not close.
Right.
So, we're being very careful to screen our no-vad reverse mortgage short sales to make sure they stand a chance before everybody expends time and effort.
Wow. Okay. And speaking of that, so you just kind of answered my next question I was going to ask you, Bill. So you have been getting a lot of them in right now, a lot of.
Yeah. I mean, our incoming pipeline has been bigger than it's been in 5 or 6 months, maybe longer. And for some reason, half of them are reverse mortgages, and I don't know why.
I don't know. Anybody have the answer to that? Anybody else on the panel? Is it? I mean, are the people that have reverses? Are they, like the situation before? Are they going into a nursing home? Have they passed? I mean, it's kind of a weird scenario. Both. Wow, that's really strange. Janine, I'm going to ask you this question because I know you still do them. Have you been getting a lot of any new listings that are short sales or dealing with foreclosures? Because I still don't see a lot of them on the market right now.
The volume has not increased right now. I know it's coming, but not right at the moment.
Right, and that's why we kind of chose to have these little panels to kind of give all of you guys a head up. If you have any questions, ask now before the craziness starts again.
Louisa, one of the things I wanted to mention is, I know last time we talked about on our panel people coming out of forbearance looking for options and looking to see what they can do with their property. We're starting, some of our new short sale clients are people who were in foreclosure prior to COVID, and then COVID saved their life and gave them a year or two extension and forbearance. Right. And now people are coming out of it and they're coming to us for short sales. So we are seeing people who were in foreclosure prior to COVID. COVID's over, forbearance is over. Now they're getting foreclosed on. Now they're contacting realtors and attorneys to sell. So that's some of the stuff we're seeing.
Well, at least something good came out of COVID, right? For some people.
But like Janine said, the floodgates have not opened yet. Nothing like I've expected to come. Just a slight increase for now.
Right.
So
I was going to say, sorry, just as I mentioned on the last panel, for those who didn't attend, most of those short sales that were surfacing were the landlords that couldn't afford to pay the mortgages because the tenants weren't paying the rent. Right. So it was more, 2-family and multiple families. But the single families, homeowners ownership hasn't really surfaced yet.
So my other question, I'm sorry, I seem to be asking a lot of questions. So those people that are just coming out of forbearance, because the market has gone up so much, are they still have to do a short sale or a foreclosure? I mean, they don't have enough equity where they can just sell it. There's still not enough in there. No.
It may. I mean, we still represent some people who, in that circumstance where there may be a sheriff's sale scheduled, but they're lucky enough to still have equity. So They hire us just like, regular transaction. But Bill, do me a favor, watch the foreclosure in the background so we don't get the rug pulled from under us before closing.
Right. So hopefully there'll be something left in there, where. But it's still, now that's a Francesca question. Francesca, when that happens, how does that affect their credit? Like if there was enough money to pay that off because, our equities have increased so much, how does that affect their buying power when they're ready to go buy another house? What happens then?
So obviously the best thing is since prices are high now, those people that may be headed there, list their house, sell it. We've got plenty of buyers, right? That'll get them out of that. So what happens after the fact? So they did a short sale, which is also in the mortgage world considered a deed in lieu of foreclosure. So they're several different programs, different ways of getting them into a new house. Let's talk about just the, what the best options are: the clean credit, the conventional, the FHA. On conventional, they're waiting 4 years, okay, to get that vanilla loan, 4 years, clean history. FHA is 3. FHA, there are extenuating circumstances for each. Divorce is not an extenuating circumstance unless payments were made on time while the couple was still married, and then at the time of divorce, one of the parties took that over, and then it started lapsing. But if at the time of marriage that short sale and those payments were late, it's going to affect both parties. if prior to the short sale, 12 monthly payments were made on time, there's also a way to shorten that span, but that's so unlikely. If someone's headed towards short sale, it's because they're not keeping up with their payments and they've fallen behind. So you're looking at 3-4 years for our regular type loans, our conventional FHA. There are these, what we call non-QM, non-qualified mortgage, which back in the day we called, BC mortgages, alternative lending, that has a much shorter time span, but they're going to pay higher fees, higher rates, higher everything. It's not recommended. It's recommended maybe, fix your credit, rent for those few years. Let's get you back on track so you're getting in the right way. Because what happens with those other loans, sometimes they're getting in over their head again. They think they start to do it, but I'd rather clean them up, help them down the line, straighten everything out, and get them in the right way with a fair rate and fair closing costs. So it's always something to look at. I love what Janine said about getting to know your client. Let's find out more of the situation so we can help them. We can help them move out of their house and eventually get into a new one.
Okay, thank you for that, Francesca. And I'm sure you'll be doing a lot of that pretty soon, huh?
Yes, that's coming.
Yeah. And what are the rates? Out of curiosity, what were the rates?
So rates are very volatile. Okay, at any given time, we're all experiencing the highs and the lows. They're still historically low. I mean, we're seeing an incline now, unfortunately, but it was bound to happen. We talk to people that were buying a house in the 80s and there were double digits in the teens, and we say, well, that's not us now, so we want that 2.5% rate back. Unfortunately, really not there on a 30-year fix. We're inching up. We're well into the threes. The housing, all these different factors have come into play with that, and inflation's coming. So it's very, very important. If realtors out there that have pre-approvals and you've been looking for houses with them for a little while, have them double check with whoever wrote that pre-approval to make sure that loan amount is still, that they're still qualified for that loan amount. Because if when we wrote the pre-approval, we were at 2.75 and now we're at 3.5, 4%, their buying power has definitely changed. So it's always good to have that little, checkup, that pre-approval checkup, and make sure they're still on track.
Yeah, because that could make a huge difference.
Very big difference.
Very huge difference. I want to remind everybody, all the agents out there, participants, that please ask your questions in the box, put it in chat, and we'll be more than happy to answer instead of you guys just listening to our questions. We want questions from you. So, Bill, is there anything else that an agent should know while we're waiting for some more questions to come in? Is there anything else that you think that can help us agents do a better job?
Yeah, I mean, just to springboard off something Janine said earlier too about the banks and the right packages. We have a database of every mortgage company and servicer package that we've ever dealt with before, and we keep it up to date. Every time a new short sale comes along and they change something, we replace it in our central drive. So if anybody wants to contact us for that package, we have it as well.
Okay, is that this package that you sent us last time, I believe?
No, so we use our short sale package, the one I created, as like a basis in case the mortgage company doesn't have their own paperwork, or just to give us enough paperwork to start the short sale if we have to collect additional paperwork from the seller down the road. But no, I mean, if someone calls us and says, hey, Bill, we have an FHA loan with Wells Fargo, we'll have a certain documentation for FHA loans with Wells Fargo, or somebody has a mortgage with Select Portfolio Servicing, we have their specific third-party authorization and their documents as well. So, and we keep it pretty up to date. So we're happy to share if anybody asks for it.
Yeah, if you don't mind, if you don't mind, you can email it to Lauren or I, and then we can forward it to the agents that are on this panel right now, so that on the in Zoom out there, so they can see it.
Yeah.
And you don't mind if we call and ask you some questions, right? Like I know
that's what I do all day. I sit here and wait for the phone to ring. So I'm happy to answer any questions.
Yeah, it's great. Thank you. It's
Yeah.
been very helpful. Even your assistant has been great. I had
Good.
talked to her once or twice, so she's been great. Janine, is there anything else that you think we need to know as agents that?
Yeah, as an agent, going into what could possibly be a short sale, I mean, it's best to do your due diligence before you get to the client, because they may not know they're in a short sale either. So that's part of the conversation that you need to have and ask the appropriate questions, and then know if you need to pivot during that conversation. Oh, you're now in a short sale. Okay, you going in, you can, if you did your due diligence, you know when they bought the house, you have a copy of the deed. You can do find the mortgage online. Do they have one mortgage? Do they have two? So you can do a little bit background yourself before you even get there on the history of the property and the seller, and knowing that, and knowing what type of mortgage they have. They may not even know that they have an FHA. So when they're having this conversation with you, if they're giving you incorrect information again, then you're going to not have the correct perception of how to handle the transaction. So you need to do the history before you get there. So you know if there's one mortgages, if there's two mortgages, if it's FHA, because FHA short sales are handled differently than a regular conventional. And just because you're dealing with Wells Fargo doesn't mean that Wells Fargo is the investor that's holding that mortgage, that note. They're usually just the middleman. There's always an investor on the back end. So when you're sending your package, you're just sending it to them. The investor on the back end is the one determining what they need to net to get that off their books. When you're taking a short sale listing, it's important to have certain certain wording in that listing agreement. If you're taking the listing for 6% and the seller is not netting anything, which they normally do not in a short sale, that if the bank says, hey, because your buyer is coming from the same brokerage, we're not going to pay you 6%, or we're just going to reduce it in total to 5%. If you're offering out 2.5% and you don't have language in there that indicates that you need to split that reduction equally between brokerages, guess what? The listing agent is going to eat that difference because you still offered out a specific dollar amount to a buyer's agent. So as a listing agent taking a short sale, there is documentation, information, and research you need to do. A lot of people think we're taking a short sale, there's nothing we need to do. We're going to go stick a sign in the ground and wait for this to happen. That's not the case. The lender is going to pay you because they know you're going to work the short sale and they know it's time consuming. And that's why they're not opposed to paying higher commissions. But you need, like I said, you need to really understand how to navigate and process the paperwork and follow it through. And that's where bill services also come in, if it allows the agent and alleviates the agent to get on to the next deal, so that his office can work with you in connection with moving that short sale forward.
Okay. Thank you, Janine.
Can I add some things?
Of course.
So when the buyer, so you've got that paperwork, you've got the short sale, you've got it in the works, and you've got the buyer. So I have this buyer, they've got Janine's listing. So apart from the short sale, so we're still approving that buyer the way we would approve any other buyer. So the added caveat is we need the short sale approval. Okay. So, and we still do the appraisal. We do everything the way we would do on any other mortgage. We have everything ready to go. Now we're waiting for the short sale approval. We want everything ready to go because we don't want to be the one holding it up. As you know, it could take a while to get the short sale approval. So sometimes things need to be updated. Unfortunately, what I've seen happen in the past is we get that short sale approval. We're almost ready to go. And whoever's holding that paper has now sold the servicing for that house. So they've got to get everything kind of updated and reapproved. They give you a time frame. They say, okay, now you have it, January 1st, you're approved. You need to close by January 31st. So we always want to have everything lined up, but that's happened. So there are things to watch to look out for as a realtor to make sure that, if that happens, we need to pivot and submit more paperwork. There's always paperwork. But as far as when we're writing the mortgage on that short sale, it still has to appraise. It still has to meet, certain criteria. And of course, that short sale approval is usually the last piece that we need to then say, okay, now we can go to closing.
Okay, thank you, Francesca. I just had someone ask me if we can give like a 30-second break because it's hard to write questions because they still want to pay attention. So how about we just like kind of give everybody 30, 45 seconds to write down questions. So if you guys have a question, write it down now. We'll be quiet. We won't give any information, and then I'll start answering all your questions. Okay, fair enough? So go ahead. We'll give you a little bit of a break. Okay, are we good? Do you need more time?
I see
let's see.
questions.
Yeah, Peggy, you want to look at the questions?
Yeah, I just see the one that was before the break. What is the tax exposure to the seller after the sale?
Most of our clients won't have any tax exposure. So when a mortgage company agrees to do a short sale, they're going to issue the homeowner a 1099-C for the canceled debt. The canceled debt is going to be the portion of the loan that was forgiven as part of the short sale process. Most, if not all, of our clients are going to be able to avoid paying tax on that income. The Mortgage Forgiveness Debt Relief Act, which most agents are familiar with, was extended with the Consolidated Appropriations Act of 2021. It's valid through 2025. And for purposes of this seminar, it's going to exempt the principal residents from that taxation as long as the debt that was canceled was used to purchase, improve, or refinance the home. For second homes or investment properties, there's an exemption for people who are considered insolvent. Again, for the purposes of our seminar today, you are deemed insolvent if the total of your debt exceeds the total of your assets in an amount that equals what the 1099 is canceling. And then a third exemption is for people who file bankruptcy and include the mortgage in that bankruptcy. It's going to cover 99% of our clients who are doing short sales. The ones who don't qualify for one of those three exemptions will have to pay the tax, and trust me, they're probably wealthy and deserve to pay it, at least in my experience.
Okay, thank you for that.
There's another long question here. You want me to read it?
Go right ahead.
Okay, we have one says first-time home buyer. Is that only for the very first home bought, or is there a time lapse span that would then allow the buyer to be considered a first-time home buyer? For example, the client bought a home together 28 years ago. It went into foreclosure. They got divorced 22 years ago. She is now looking to purchase again for the first time since then by herself. My apologies if that sounds confusing. Did that make sense to whoever might answer that?
So she would qualify as a first-time home buyer. Now, that it depends on what you're looking for as a first-time home buyer. Are you looking for that FHA 3.5% down? Because you can get that whether you're a first-time home buyer or a second home, as long as that's your only home. That you're not, if you're buying an investment property or a second home, of course, that's not first-time home buyer. But if you bought a house and you're selling that house and buying another one, you would qualify for that FHA loan again if you wanted. As far as, let's say, first-time home buyer grants, we have some of the county grants, the state grants. In order to qualify for first-time home buyer, it does need to be your first home, but you also have, in some cases, if they're getting divorced, they're a displaced spouse, that they could qualify then because they fell with, like they were with their significant other and they qualified together, and now they can qualify on their own. And also some of these grants, if they haven't owned a home in 3 years, then they can pivot back and be that first-time home buyer again in the mortgage world.
Wow, thank you. There was one, I see a couple more questions, but there was one ahead of that one. Is there one? Oh, look for the partial claim deeds, right? That was from before we took a break also.
It was.
Okay.
Assuming you mean partial claim mortgage, not deed. Like a partial claim mortgage from doing a loan modification on an FHA mortgage. So people who do loan mods on FHA mortgages, the government pays out an insurance claim on the arrears and then files a silent mortgage against the property where no payments are made until maturity or until the loan gets refinanced or the house gets sold. So what happens is a lot of people forget about that or don't realize what they're signing when they're doing loan modifications. So they hire a realtor. Realtor doesn't do as Janine said. Realtor just lists the house and sells it. And title report gets ordered. Everyone's ready for closing. Week before closing, my office gets a phone call. Bill, we thought the seller was walking with 20 grand. Now they got to bring 50 to the table. No one told us about this HUD mortgage against the property for 100 grand. So that's a valid point. You have to watch out for partial claim mortgages if your seller's ever done a loan modification on a property, because there may be what people consider a silent mortgage against the house that will change it from being a regular transaction to a short sale pretty quickly.
Okay. Thank you for that. There's an agent here who has a couple questions. Let me see. If someone has a reverse mortgage and it's a short sale, does the next of kin need to cover that debt? Bill,
No.
would you know the answer to that?
Yeah,
No.
no. I mean,
No,
Janine
right.
will shake her head. No.
How would the next of kin be responsible? They didn't sign the note.
Right.
The note is the IOU to the bank. It says I'm obligated to pay you. They don't
I mean,
inherit.
only the borrower on the loan, whether they're alive or whether it's an estate, could possibly be responsible for repayment of a mortgage. And the whole point of doing the short sale is to avoid that anyway. So,
Okay. Peggy, more questions here? Or?
Is what is the fastest way to get a short sale approved?
Is having, you know what, I've done them in as little as 45 days. I've done them and they've taken as long as a year and a half. The best way is to package and bundle your documents and get that list and make sure it's complete going in. After they have a certain time to process, meaning the processor, for the lender, they usually have a time frame. They might receive it today, but they don't have to respond to you in 30 days because you're not the only short sale that's coming to their desk. So they have a time frame to which to respond. How many times will you send the package, you have confirmation, and they say, sorry, I don't have your documentation. It can be uploaded through different portals, different emails, specific websites. And they say, oh, guess what? I don't have your short package. Your short sale package. You've waited now 15, 20 days. And now they're telling you, sorry, we don't have anything. So now instead of arguing with them, it's best to just resubmit the entire package. And if it takes them, over their 30, 60 days, those financials expire. So now you got to go back to the homeowner and now you got to ask the homeowner for 2 more months worth of bank statements, full bank statements, because those expire. And then the short sale processor is going to tell you, oh, sorry, those documents expired. So now you need to submit those. So it's just best to submit everything and have it in a nice, neat, tight package and keep track of your time and always follow up. Because if they don't have it, you can easily have it readily at your fingertips to resubmit and know that, you know what, after 60 days, you're going to have to ask for those financials again.
Bill, how long have you seen them take, like in his last few months?
yeah, I mean, I agree with Janine's timeframes. I mean, we've had some really lucky ones that were approved extremely fast. Some of those Wachovia World Savings loans back in the day that were part of the whole mortgage explosion and implosion, so that went really quickly. We've had some FHA ones that have been nightmares that have taken very, very long. So, I mean, I like to say that most of them are done and or at least approved or we have an answer within 90 to 120 days. But I mean, some are going to be shorter and some are going to be longer. I mean, it depends on, as Janine said, the cooperativeness of the seller, how adequate their paperwork is, timing. A lot of it, unfortunately, is out of our control. It's, how busy the mortgage servicer is or mortgage company is, and you can expect those timeframes to increase in the future because the more short sales they have, servicers aren't in the business of losing money and over hiring people, right? They're big corporations and they want to squeeze every dollar they can. So they're going to understaff and underpay everybody that works there. So the more foreclosures and short sales there are, the longer timeframes you can expect. Again, and in addition to what Janine said, having the right people on your team, the right title company who's going to get you what you need quickly. Obviously, if we're handling the short sale, we're going to handle it quickly and competently. It's the best way you can get them done quickly.
Thank you, Bill. Bunch of questions here we have to answer.
Yeah.
Good.
Here, I'll go one. Here's one. If you want to buy a foreclosure, how can you know when you can lowball? I see some go high and some go very low. I guess nobody wants to answer that.
Yeah, but that's a tough one to answer. I think that's
There's really not a definitive answer
Yeah.
to that. You know, with the foreclosure, you're submitting the offer, and again, the asset manager at that point is going to present the offer, and again, there's an investor on the back end. And even with short sales and foreclosures, they truly want market value. It doesn't mean that you're necessarily going to get it below market value. They're really looking for a market value for that home in its present condition.
And I'm also going to think, I'd like to add that if it's something that's on the market now and our inventory is so low, it's going to be like any other property on the market. There may be a bidding war on that short sale also. So I'm going to say you better come in with your, you know, your best offer on it so your buyer can get that property. Because I'm going to assume that the investor, the bank, is going to look at those offers the same way that a normal seller looks at them also. Am I correct on that one, Janine? You know,
You are, and in this market too, because of the mindset that people think just because it's a short sale that they're going to get a good deal, you have a boatload of investors out there who are cash heavy that you're competing with. So, you know, if you're going to represent somebody in that arena, they need to be pretty strong because you're dealing again with investors.
right, correct. So here's another question. I have a first-time home buyer. She keeps telling me there is all this grant money for the down payment and closing fees, but can't give me anything solid. Where can I verify the existence of all these programs myself?
I can answer that one. So there are several different programs, grant programs, down payment assistance programs, affordable housing programs. The loan officer that's working with your buyer is going to know the answer to that. I mean, I could send you guidelines for the different programs, and you know, the realtor can figure it out, but you know, let the loan officer do that work. It's going to depend on, you know, obviously their income, but their assets, their debt to income ratio. There are many factors involved in qualifying them for the grants. When someone comes to me to get pre-approved, without even asking, I'll kind of go through my checklist to see if they're eligible for any grants. If they are, we go over that in more detail, but I will also let the realtor know there's a $10,000 grant from, you know, New Jersey grant or Monmouth County grant or Ocean County grant to help them with toward down payment and closing costs. The only way you really know is if whoever ran their credit and ran the numbers is also signed up to be one of the lenders for the grant. If your buyer is saying, oh, I'm going to apply directly with the Monmouth County grant, it's not going to happen. They have to go through a lender, an approved lender. So the best way to check is through the lender. If that person has only like read about things online and thinks they're eligible, encourage them to get a full pre-approval with a lender that's on that list and find out if they're eligible for that grant, whichever grant she's talking about. If it's not the New Jersey, there are different county grants, and I mean, there are many of them. I wouldn't know how to tell a realtor to go through it. I don't think that you should have to do that. I think you should, you know, leave that up to the lender, because we're getting into, again, credit. Some of them have to have a certain credit score to do it, certain income requirements. And it's not just, okay, they need to make X amount of dollars or not go above that. It's how many people in the household. We count everybody in the household, even if they're not on the mortgage and not on the deed. These grants look at the whole group that's buying the house. So for example, you have a couple buying a house, but their grandmother lives with them, who's collecting Social Security. They're going to count that income, even though that grandmother has nothing to do with the mortgage or the deed. They go by the household. So there are a lot of moving parts to that. So again, back to the lender to verify. Okay.
Okay, thank you for that.
Thank you.
Peggy, you want to read the?
Or let me just say it's lost here. Okay, here's what I think we kind of talked about. What are the attorney fees for a short sale?
I mean, I can't speak to other offices, but I don't, when I'm representing a seller, there are no fees. I'll get paid by their mortgage company. So if you have a seller and you have a short sale listing and you want my office to do all the work on getting it approved, we will charge the seller's mortgage company, not the seller, not the realtors, not the buyer, just the mortgage company. So zero. Answer your question is zero.
Okay, that's awesome. You never had a problem with that, right, Bill? There's never been a bank that.
Out of thousands of short sales, a handful.
Right.
If for some reason I'm working on your short sale and I'm halfway through it and the bank says, sorry, we're not paying you. Fine. I'll work the file through until either an approval or a denial, and then I'll turn the file over.
Okay, thank you for that.
Oh, here's one that says, good morning. Thank you for sharing your knowledge. Is there any classes for realtors how to get these kinds of listings? Well, I'll let you answer that one, Louisa. We don't have any.
I don't know if there's any, I don't know of any classes that realtors can take on how to get these listings. I know the listings I myself personally have gotten in the past have been people that I've just known that got into trouble. I don't, you have to, I guess you need to have some type of relationship with the bank. Am I correct on that one, Janine? For the agents that do list a lot of these short sale and foreclosure properties, but I really don't know of any classes that are being out there offered. If they are, I mean, we will look into it. And if there is, we will put out some type of announcement for it. Okay, next question we have, what is the advantage of doing a short sale as opposed to a foreclosure since seller is not coming out with any profit?
I mean, from our standpoint, and Francesca, even when they have to requalify again, a short sale is better because they're not actually letting the property default and just revert back into the, you know, go to sheriff's sale. So it's better for them to work with the bank and either do a deed in lieu or go ahead and sell it for less than what's owed on the full mortgage, on the full note, and you know, relieve themselves a little bit. I mean, yes, it's going to be a credit impact, but not as much as a foreclosure.
Correct.
Because that's a happy medium. They're working with the bank to give it back as opposed to it being taken back.
Correct. So for example, on a conventional loan, short sale, the waiting period's 4 years. Foreclosure, it's 7. It's a 7 years. So that's 3 years. That's the benefit of that. And also moving out. I mean, just think about, you know, they're human beings. They're moving out with dignity, not, you know, okay, now you're foreclosed and, you know, the sheriff's coming to kick you out. You know, they've got a little bit like that. It's a little bit more on their time frame saying, okay, there's an agreement in place and there's an actual closing where they're moving out with dignity, I'd say, versus, you know, knock on the door.
And a lot of people don't understand, and Bill can follow up with this as to not give legal advice, he can. But when somebody goes to foreclosure and this is where educating the homeowner becomes important, because they feel that, you know what, why go through this hassle? I'm going to walk away with nothing. I might as well just let it go to foreclosure. Well, just because you go to foreclosure doesn't mean at some point the bank isn't going to pursue you for a deficiency judgment.
Yeah, I mean, that's a big selling point too for agents who are meeting with clients who may be on the fence about doing a short sale, is that 2 things. One is, you know, while you're waiting for that foreclosure to happen or the sheriff's sale to happen, you're still responsible for that property. You're still responsible for the maintenance, the snow removal, the liability. So even if you move to Florida and said, I don't care about New Jersey anymore, you better have somebody come and clean up that snow when it comes this weekend, because if somebody slips and breaks their leg, you're still responsible for it. Now that sounds like lawyer talk because I've never seen that happen before in my life, but again, it's a possibility. But to what Janine was saying was, when a foreclosure is over in New Jersey and Pennsylvania, the 2 states that I'm licensed in, the mortgage company, I mean, we all know that absent a rare circumstance where there's equity, there's going to be a deficiency balance, meaning the foreclosure is not going to yield enough proceeds to make the mortgage company whole. It's not going to satisfy the entire debt. So both states allow the mortgage company to then file a secondary lawsuit against the homeowner for the deficiency, which Janine correctly called a deficiency lawsuit. Now, while those lawsuits may in fact be rare, it is a legal possibility. And if that were to happen to somebody, they would have a massive judgment following them around for probably for the rest of their life. So forget about contacting Francesca to get a mortgage, because they're gonna have a $30,000 personal judgment from their last foreclosure on their credit report. So even if they wait to 7 years, how are they gonna pay this $40,000 judgment before they buy again? So doing a short sale is gonna get you a piece of paper that promises the bank not to come after you for the difference. And it's written many different ways, but in so many words, it says, we promise not to pursue the deficiency. And having that piece of paper is well worth the trouble of going through a short sale and not getting any proceeds, just to have that one sheet of paper.
Okay.
So that's a big selling point and the difference. And it's, you know, when you're educated and you're having that conversation with the client up front, it's another pivotal moment that could, hey, you know what, let me list. It's not costing them any money. The commissions are covered by the lender. So yes, I'm going to walk away with nothing. I'm going to walk away with pride. I'm going to go through this. I'm going to clear my credit in the future faster. And there's going to be nothing lingering over my head. Whereas if, hey, I'm just going to walk out the door, you know, there's a lot of ramifications and implications that can happen after the fact. So short sale is really the, you know, and a deed in lieu. Those are really viable options for a client, and navigating them through and being educated as an agent to be able to do so is really, really important to be able to have that conversation with them.
Okay. Are the people in forbearance going to have the mortgage payments put at end of the mortgage, or are they going to have to pay up in full? I heard they have to pay up their taxes and homeowners insurance that the bank has been paid. Am I reading that correctly?
The bank covered during that forbearance period. The bank paid those escrow, you know, paid that out of escrows. So that's, I mean, that's all specific to the lender on how they wanted to handle that forbearance. If they put it on the back end, yes, they still went ahead and paid those disbursements according to, you know, not to have any liens on the property during that time. So they made those payments so that the amortization or their escrow is going to change, not their amortization, but their escrow is going to change. There's probably an escrow deficiency because no mortgage payments were being made. So a lot of homeowners have now gotten an updated escrow analysis, which is probably leaving them short because of the advancements on those payments.
Got it. And I think there's one more question that I see here. Okay, so it's, what is the best way to establish a relationship with banks to get foreclosure listing? All I'm going to say, what I like to comment on that, myself, Peggy, and Lauren, we are your education committee. Anything that's available out there, we will make sure that we will get it to you. I think there's going to be a need to have another one of these panels in the very near future. Looking at your questions, I see a lot of you are interested in how to get this. So there is a designation course that will probably be bringing up. So in the near future, always check your weekly email from the board that you get every Monday afternoon, because whatever classes or events we're going to host in regards to this will be posted there. So give us some time and we will schedule some more classes for you guys. Okay, is there anything else out here that did I miss anything? Boy, this is really good. We really just ran close to an hour. Do you guys need like a few? Okay, as a buyer's agent, what are the best tools such as sites or through the MLS to find short sales and foreclosures?
Well, if they're in the MLS, they're already listed.
Right.
So that would be a viable option. You know, check your tax records, see if a notice of sale is pending, you know, just check. I mean, there's different programs out there that you can check people, you know, check the equity status on somebody's home. I mean, there's a lot of different tools out there that you can use, but MLS means they're already listed. So I wouldn't start with the MLS.
Yeah, the MLS only on the Realist program. It'll tell you if it's in like a pre-foreclosure or something on Realist. There's Remine and RPR. That may say something. You can go to the sheriff's, the site for sheriff sales and look at that, see what's available that way. I don't know if that's going to help you get a listing. But that's really all, that's really it. If we have questions for Janine, how do we contact her? Is she available for questions? Uh-oh.
Absolutely.
Yeah, Janine, do you want to just give, can we put your number, your email in the chat maybe?
Absolutely. You can put my email, my cell phone number, my office. I'm either in Red Bank and Howell. It's Next Home Force Realty Partners and Next Home Force Premier. I spend time in 2 offices. You can reach me anytime on my cell, which is 917-748-7387. And I can put it in the chat. I can write it down. And my email is jbradyrealtor@gmail.com.
I think we've answered all questions, right? Peggy, Lauren, I don't see
Yeah,
anything we missed.
I don't see any more. And I think we should send everybody's contact out again, all the panelists, just so everybody's got them.
Yep. Lauren's already doing
You
that.
sent it. Yep.
I'm sure she is.
Lauren's on it. She's on it. And for everybody out there, please, if you have any more questions pertaining to this, I know we sent out a survey for questions. Nobody responded to us with questions ahead of time, but if you have them, please send it to us ahead of time. So, not that our panelists need to be more prepared than what they are. They know everything, but it'd be nice just to have some more questions up front that we can ask. So if there are no further questions, let me just make sure here.
Looks like
Lauren is a rock star. Yes, she is. Yes, she is. We couldn't do this without her. I want to thank you guys again, Janine, Bill, and Francesca. Thank you again so much. You are all a wealth of information. And thank you all for coming, and make it a great day, okay?
Thank you.
Thank you. Thank you, everybody.
Bye, everybody.